Good afternoon. Welcome to RE Journal's Breaking Through the Disruption webinar series. Thank you for joining us today. We have a great panel. We're going to talk about CARES Act PPP round 2 and maybe some things about round 1. We've got a good panel of people, so get your questions in the chat room. First thing I want you to do though is put your name in the chat room, your name, where you're from, and where you work. I'm trying to get my CE slides up here today. Breaking Through the Disruption, RE Journals. First thing I got to do before we start our program is thank these sponsors, Bridgewater, Wipfli, IREM, and SIOR. And I've been beating this drum to death, but I have to do it again. We are in the live event business. We love being together, shaking hands and seeing people, and we can't do that. We're really happy to be able to put on webinars. We're doing 6 or 7 a week right now. And we couldn't do all this without sponsors. So thank you all for pivoting with us and helping us bring people news and information, and maybe at least seeing some smiling faces from their homes while they're working. Okay, today's program in Minnesota and a couple other states is approved for continuing education credits. So we have to track attendance. Let me read this. This webinar has been approved by Minnesota Commissioner of Commerce for 1 hour real estate continuing education. There, I met that. How do we track attendance? What you need to do is make sure you put your name in the chat room right now if you're here for CE. Okay, that will timestamp it and I'll know that you logged in. Then I'm going to ask 2 questions during the presentation at random times. So you got to be paying attention. I ask those 2 questions. You put your answer again in the chat room, and then that'll log you in and say you were watching. And then at the end, I like to have people put their name in one more time just to make sure that we don't we get their timeout stamped correctly. Okay, if you have connection issues, there's a button at the top of your screen for reconnect. That'll fix 99% of the problems. So if you see Nick or Ryan or Jim freeze up as they're talking, or your audio gets glitchy, punch that button. That'll usually fix that. If that's not working, try using Google Chrome. If that's not working, just close your browser down, open it up, use that link and open it back up again. And that usually fixes everything. My chat room is to the right. If you haven't found it yet, go in there and pop your name in, where you're from. I see some people not putting where they're from. Put where you're from. We want to know who you are. What company you're with. Also, there's polls. So I'll throw up a couple polls, maybe one during the program just to keep things interesting, but that's right below your chat. You'll see that light up red once I activate a poll, but you'll want to keep the chat room open most of the time. Last housekeeping item, we will have a replay of this available. We have our own YouTube channel now. So rejournals.com/video replay. You'll find all of our replay of all of our events. So today we have demystifying, and that may be something we can't accomplish, but the Forgivable Payroll Protection Program loans, what this means to the real estate industry. This is an awesome panel. Can't wait to get started. I'm going to give these guys just a brief introduction and then let them tell a little bit more about themselves. I'm going to start with Nick Place. Nick is a banker at Bridgewater. He's done a ton of PPP deals. In fact, they helped yours truly out with getting the Minnesota Real Estate Journal through the program. So Nick, give us a little bit of your background, and then, we're in week 6.
$2.3 billion in assets, primarily a business-focused bank, and we do a lot in the real estate space with apartment owners and CRE owners. I've been with the company since 2007, so going up 13 years. We've got a really great team of folks that have been working really hard on these PPP loans since this program was rolled out. Like a lot of folks doing it remotely, I'm at home. I apologize in advance if my 8-year-old or 5-year-old come screaming in, but trying to grind out a lot of PPP loans and keep saying at the same time, I think, like a lot of people. So it's been an interesting process so far.
I've been giving Nick and other bankers a hard time because I think people get into banking because it's traditionally a 9-to-5 job. People have been working Saturdays and Sundays and late nights, and so I applaud you for doing that. We're going to hit Ryan next. Ryan's an attorney. and he's frozen on my screen. Hopefully he's not frozen on yours. Ryan, if you're not seeing us, just reconnect yourself, but looks good now.
Yeah.
Okay, give us a quick intro, and then 6 weeks in, what are you working on? What's going on in your world?
Sure, Ryan Schildkraut. I'm a partner at Winthrop Weinstine in Minneapolis. I'm really typically more of a closely held business and mergers and acquisitions attorney. But when most of my M&A deals kind of fell apart when this all started a few weeks ago, kind of quickly jumped on the PPP program and kind of took it upon myself to become kind of a resident in-house expert for all of our small business owner clients. It's ranging from operating companies to people in the real estate industry. So I feel like, I went from, I basically have gotten a new job in the last 6 weeks where I've just been kind of eating, living, eating, sleeping PPP all day, every day. So I've just been working with a lot of business owners on, whether they qualify for the program, on their applications, trying to kind of operationalize how they should spend the money to get the maximum amount of forgiveness. I'm actually in the office today. It's my first time here in weeks, but I've got a 1-year-old and a 3-year-old at home, and I didn't think I could risk them not having a temper tantrum in the background, so decided to come in, and it's been kind of nice because there's no one here, and it's nice and quiet, and I'm actually been able to be quite productive today.
Thank you. Yeah, it's good to have you online. You're going to give us a good background. This next guy, Jim Lockhart, and I have known each other 1990. We won't even say.
It's been
How about that? It's been a while. My first ever real job, Jim was right there, the smartest guy in the building. So I kind of tried to follow in his footsteps for a long time, become an attorney and a CPA, and have the background he has. But Jim's brilliant when it comes to tax and tax-related stuff. He's been heavily involved in the CARES Act and the PPP loans, so we're going to rely on him today too. Thanks, gentlemen, for joining us. Let's start off with maybe Nick. Do you want to recap? For those that hopefully it's not your first time hearing about the Paycheck Protection Program, but let's just pretend for a second that it is. Where did we start when it happened? And then bring us up to current. Where are we at right now?
So this program was part of the original $2 trillion stimulus plan that was passed through Congress toward the tail end of March. They had carved out right around $350 billion of proceeds from that program for this loan program that was then to be administered through the SBA and originated by banks. So the concept essentially is that any business that qualifies under the SBA's parameters, and we'll get into those details later on, but that business would be eligible for a loan that would amount to essentially 2.5 times your average monthly payroll. So should you have average monthly payroll, you could get a loan for 2.5 times that amount, as long as you spend, and I'm going to paraphrase all the steps here, which we'll get into details in a bit, as long as you spend at least 75% of that on payroll over the next 8 weeks, that loan would be a forgivable loan. So that last piece has really been the key driver of providing interest level for folks, is that, there's the opportunity for them to get 2.5 times of their payroll forgiven in a loan, from originated through banks and provided through the SBA. So that was round one. Those funds, the $349 billion, were exhausted in, I think it was 13 days. The average loan size in that program was, I think, right around 230,000. I want to say 250,000 through maybe around 1.5 million loans. Due to the demand, they were certain that funds would run out relatively quickly. So, Congress people were very early on suggesting that they would add more money to the program, which they eventually ended up doing. They added another $310 billion to that program, which then that went live on Monday. And so folks are now working through the funding of that tranche of money now. Nothing really changed in the round two, other than we continue to get additional guidance from the Treasury and the SBA on sort of details of the program. But nothing really administratively had changed through round one versus round two.
Yeah, Ryan's feeding back. We'll just try to talk over here. So Nick, how many applications did you guys process in that first round at Bridgewater?
So we had probably, I want to say we had close to 1,400 inquiries that we received from people through round one. Of those, we closed roughly 600 loans. The dollar volume of those loans was around, I use rough numbers, roughly 150 million. So our average ended up being similar to what the national average was. I think our average was, right around 250 grand too.
So, wow, that's crazy. That's a lot of loans in a very short period of time. Congratulations. Is that kind of what's causing this logjam, that just sheer volume?
Absolutely. I mean, for us, we, and in an average year, so we're a commercial bank. I mean, our average loan size is, anywhere from, on a weighted average is probably, $1 million. We originate roughly 800 to 1,000 loans in a year. So, for us to originate, 600 loans in the span of 2 weeks, our operationally, and like a lot of commercial banks our size, we're not built to do a high volume of loans like that. So, let alone having the struggles of trying to stand that program up while everyone's working remotely and, using technology. We can't have clients coming into our branches, signing loan documents and dropping things off. Everything had to be handled remotely. So, and that was something that we hadn't historically done a lot of. So there's a big lift on our technology side to stand up the program with, utilizing DocuSign and allowing for the volume that we knew we were going to have, and providing a ease of use for clients that we're not face to face with any longer to actually process these. So that, and also while trying to figure out the requirements of the program, which we didn't have a lot of clarity from the SBA early on, it's a big complicated program with a lot of nuances to it that we had to figure out at the same time that our clients were figuring out. So it took a while to really get it up and running, but once we did get it up and running, we were able to work through a lot of requests pretty quick.
Yeah, I specifically recall on a Sunday night, I got an email from someone at Bridgewater that said, "Here, fill out this form quick." And okay, we don't even really know how to fill everything in, but it all got done, and you guys got a ton of them done, and that's pretty cool. Ryan, let's switch over to you. People don't call you unless they have a problem, I would assume, whereas they're calling Nick if everything goes smoothly. They don't call. But what's the volume been like for you? A lot of interest from clients?
Yeah, a lot. A lot of it's kind of gone in waves. So the first wave was people trying to figure out if they were eligible for the program. Now, I'm probably not getting the calls from businesses who are clearly eligible. So people who, definitely have less than 500 employees and don't have any affiliates. So I was more involved in the more complicated, analysis of, people who maybe by themselves have less than 500 employees, but when you start adding in all of their affiliates, it pushes them over 500, or people who are in some gray area of whether they comply under some sort of other revenue standard. Then as people got their applications in and started getting their loans, we've kind of transitioned. So now the big focus in the last week or so has been on forgiveness and how is forgiveness going to work and what business decisions should they be making to kind of ensure they get maximum forgiveness. And now, in I guess the last 72 hours, because of some new guidance from the SBA, and a lot of bad publicity from other companies, public companies who were taking out these loans and maybe shouldn't have. People may have seen that the SBA has now come out with new guidance that kind of muddies the water on whether it was appropriate for all these business owners who took out the loans to give a certification that the funding was truly necessary for their business. So they released some new language. We can talk about it later, but it really has it's led to more questions than answers. So the vast majority of my time in the last 3 days has been talking to people who got loans about whether they can truly say in good faith that the loan was necessary, and if they're uncomfortable with it, what they should do, whether they should pay the loan back now or maybe at the end of the 8-week period.
Cool. Jim, I think I have your slides loaded. Let's check and see. Is this you? No, that's a different document.
That's a different Wipfli document.
All right, send me your slides. You sent me the wrong one. I'm going to let Jim, when he gets them to me, we'll pop them up on the screen. But really, this comes back to Nick. And the first thing I want to talk about is just to be really clear, we got two calculations, right? So you make that first loan application, you get approved, money's put in your bank. That's not the forgivable amount. So can you walk us through what the difference is between the two calculations and when the timing is? Oh, turn your audio on. There we go.
Just to take a step back. So as I mentioned, so the loan amount is sized based off of the company's payroll, and there's some limiting factors to that where you limit someone, payroll for folks over 100,000, it's capped at 100,000. And so once it's down to where it's 2.5 months of that average monthly payroll. So let's call it 10 weeks. Well, then the money has to be spent over the next 8 weeks, and at least 75% of that money needs to go toward payroll during that 8-week period. If 75% or more goes to payroll, then 100% of that loan would be forgiven. Now, if you spend 75% on payroll and then the 25%, there are a few other eligible uses. You can spend the money on rent, utilities, or interest on bank debt that was incurred, I believe, before February 15th. So those are really the eligible uses: payroll, rent, utilities, interest on bank debt. So if you spend 75% on payroll, the rest on those three other categories, at least as we know today, it should be forgiven. If you spend less than 75% on payroll, and maybe Ryan could add some, or Jim could add some additional color to it, but it will reduce the amount of the forgiveness. It isn't a cliff sort of thing. You spent 74% on payroll, not 75. You don't get anything forgiven. It's reduced some after that. And maybe Jim or Ryan can add some color to that.
Yeah, I would add, I've been asked a lot the last few days. Oops, still there?
Yep.
Sorry, I'm blank. Okay. No, I've been asked this question a lot the last few days. What if I don't spend 75% on payroll? What happens? The guidance really hasn't answered that at all. I've heard some borrowers told by their banks that if they spend 74% on payroll, they violated the terms of the loan and they're eligible for zero forgiveness. Now, I can't find that authority. That's clearly not anywhere in the rules. But there's also nothing that says what happens if you don't hit 75%. To me, it seems that kind of the logical answer is whatever is not forgiven and wasn't spent on payroll maybe should just be paid back to the bank. But it's really unclear at this point. But I would find it very, very hard to believe that someone who didn't spend 75% on payroll, but nevertheless kept their employees paid and on staff, would not be eligible for forgiveness. But that's definitely something the SBA needs to clarify.
Yeah, in the original act, the 75% wasn't in it. That was imposed by the SBA and Treasury. So I agree with Ryan and Nick. It's unclear as to how much would be forgiven, but I saw an example of what if 70% was spent on payroll and 30% was spent on the other permissible uses. Does that mean none of it's forgiven? I mean, that would just be a very draconian result. So, hopefully the SBA provides some, guidance on this, but it isn't in the law anywhere, this 75%. It's purely an administrative rule set forth by the SBA. So,
Look at that. So these are your slides, Jim?
Yeah. We put this together just recently, and I just, if anybody would like them, we would certainly, send them to you. There's a list of unanswered questions in the back, and the SBA was supposed to provide guidance more, guidance by the 26th, and they, haven't done that yet. But yeah, so we have a full presentation that was put together over the forgiveness. So if anybody would like them, we would certainly share them with you. Just give us your email address and we'll send them out.
Yeah, I'll flash Jim's email on the screen. We got to take a break for 1 second and ask us continuing ed questions. So if you're in Minnesota watching for CE, pay attention right now. You need to go into the chat room. Here's your question. I'll repeat it twice. Have you applied for a PPP loan? Two-part question. Have you received a PPP loan? If the answer is no, are you still considering it? So pop in there into the chat room. If you're getting CE, answer those questions. And I know that Nick is kind of interested and Ryan in the answer. So, it's okay to be a little bit more descriptive in your answer. Jim, let's get back to you. I interrupted you. Or did I interrupt Nick?
All I said was if anyone wants the slides, they can certainly provide their email and we'll send those to you.
Perfect. Okay, my next question then for Nick and Ryan is, I think that the most consternation we have heard on our webinars from people is the independent contractor or the small company where it's a sole proprietorship or something. Can you address what's going on with the PPP loan and the best way to handle it if you're a sole operator? Nick, turn your mic on again. There you go. Cool.
Ryan, you want to take the first crack at it?
Yeah, I'll take the first one. I mean, I think there's two different kind of fact patterns here. One is if you have any other employees or if you don't. So if you do not have any other employees and you're kind of a true sole proprietor, you are still eligible for the loan. What you do though is they cap it at 8 weeks of your net profit based on your 2019 tax returns, capped at $100,000. So essentially, if you looked at 8 weeks $100,000 prorated over 8 weeks, it's about $15,000. So that's what you would be eligible to borrow. It's a little different than that. You take that number and then you multiply by 2.5. That's so you can borrow, and then you can use most of it to replenish or replace your own income. You could also use some of it, to pay mortgage interest, utilities, and rent. If you have employees, it's the same way you'd calculate it for really any other business with employees, except that you add in your own self-employment income up to the $100,000 cap along with your employee wages for purposes of calculating the loan amount.
So there's not a straightforward, simple answer. Nick, have you been able to get some approved sole proprietors or independent contractors?
Yeah, we've moved we've done a fair amount of them. There was a smaller amount in the first round, mainly because there was some lags in when those sole proprietors were eligible to start applying, which sort of put them toward the tail end of the queue on the first round. But in the second round here, we've seen a lot more of those, and we've been able to get a fair amount of those pushed through. And same with sort of 1099 employees as well. Similar sort of story there where they weren't eligible earlier on, and we've seen a fair amount of those get moved through here in the second round.
So another quick question that we get a lot is, are you considering creditworthiness of the borrower? Do I already have to be at your bank? Am I signing a personal guarantee? What are some of the details on that end?
Yeah, so there hasn't been any requirements for us as lending institutions to dig into anything regarding the borrower's ability to repay the debt, which, for us as bankers, that's we've got 5 C's of credit that we kind of live by, that it makes it, it sort of flies in the face of what we're accustomed to doing. And this being a program being administered by the SBA, it flies in the face of what the SBA typically does. There's a lot of typical SBA requirements whereby, somebody had to attest that they couldn't get the funds elsewhere. A lot of I dotting and T crossing with the SBA historically. And if you don't fill out a form completely or correctly, it puts the guarantee that the SBA would be providing on some of their more traditional lending programs at risk for us as a lending institution. So, us going into the program, we initially were thinking, well, A, what do we have to do for creditworthiness sort of tests? And then B, how restrictive is the SBA going to be on all of these, I dotting and T crossing? How many forms are they going to require? What are we going to have to show that we did from a collecting of information perspective? So as we were able to get some initial guidance from them, it became clear that really the onus is on the borrower to attest that they are eligible for the loan, provide supporting documentation, which their attesting is accurate. And we are really just the conduit whereby we're collecting that information, doing some reviews. We do have a certification that the lender does have to sign as we're moving these loans into the SBA system. But really, our certification is just a certification saying that you certified. So I've heard a lot of stories saying, well, yeah, the bank said it was fine, so I think it's fine. Well, we're trying to assist our clients the best we can in understanding the program. We're spending a lot of time with folks, understanding, eligibility, understanding, what we know at least of forgiveness, understanding, how the program is going to work you're getting 10 weeks essentially worth of payroll and you have to spend it in 8 weeks. So you have to think through how you're going to be able to do that to make sure that you're putting yourself at the best chance of getting the loan forgiven. But we haven't seen situations where somebody would not qualify purely because of financial performance of the company. If you had losses in the last year, but your company had equity in your company and you were feeding those losses yourself and you employ 10 people, well, the spirit, at least as far as I believe it to be of the program, was that you were keeping those 10 employees employed over the next 8 weeks. That's what they're trying to accomplish. They're not trying to say, was your business a viable business and were you going to make it in the long run? It was, can you keep these people employed for the next 8 weeks and hopefully we can all get through this. So, we try to, like I said, it was hard for us as bankers. We go into it thinking we need to dig into, if it's a new client, do I need to collect tax returns and financial statements and prove, so we haven't been doing a lot of that other than for new customers, just doing the things we need to do to follow the standard Bank Secrecy Act, know your customer requirements that we are obligated to follow even with these loans. So for those reasons, it has been, and that's why I think a lot of banks early on were directing, focusing on their existing clients because they did have a lot of that information already in hand. So for new clients, there's a little bit of extra work that we have to do to make sure that we know who we're doing business with. And that's just a general requirement that banks have to do for any transaction that we're involved with.
I've got a lot of good questions in here. So if you're asking a question and you're online right now and it's about forgiveness, I'm going to wait about 10 minutes before we get into the forgiveness piece, but I want to talk about just finish up talking about the loan itself, the front end. What is included in payroll costs? Got a couple of questions on that. So I think that applies to both Nick and Ryan.
I'll let the attorney and the accountant handle that one.
All right, there we go.
I'm happy to take that one, and I've got
Well, I can start. Do you want me to start, Ryan? I'll start. So
go ahead.
The payroll costs would be wages, bonuses, commissions, employer group benefits, retirement plan contributions, state payroll taxes, health insurance premiums paid by the employer, sick and FMLA paid is included under payroll costs. So
one thing I want to add, Jim, you mentioned bonus. That's actually something I've looked into for a bunch of clients. They've asked, if we're struggling to get to the 75% usage or trying to maximize our forgiveness, can we actually just pay retention bonuses to people? That I think is a little unclear. I don't see the word bonus anywhere in the CARES Act or in the regulations. It says salary, wage, commission, or a similar compensation. So from a legal matter, I guess the question is a bonus a similar compensation? I would argue it is, but it also wouldn't surprise me if they come out with guidance sometime in the next, days or weeks, saying you can't increase people's comp or put some sort of other limit on it. So I think everyone kind of has to tread carefully with that.
Yeah, I would agree.
Another quick question here. I was told that life insurance was not included in the PPP amount as acceptable.
That's correct.
I would agree with that. Yeah.
There are two parts to this though, right? And correct me if I'm wrong. There's still the loan amount. Is that the exact same payroll qualification as the loan amount for the forgiveness amount? Or are different things used in calculating what your payroll is on the forgiveness end?
I think there are different things. I think there are different components of it. That's my take. So for instance, when you're calculating payroll costs on the front end, you can take into account full-time employees and part-time employees. And then when you look at the back end, to see if you're fully forgiven, depending upon the calculation, you're looking at full-time employees only and not taking into account part-time employees.
Right,
So-
and that's not even accounting for the fact that on the front end, to get your loan amount, you're supposed to multiply it's 2.5 months of your payroll costs, and then on the back end, it's 8 weeks. Well, those are different. You're kind of comparing, roughly 10 weeks to 8 weeks. So even mathematically, if you really kind of model this out, you can't ever get 100% full forgiveness. Because if you have to spend 75% on payroll costs, and the amount you borrowed was based on a 10-week versus an 8-week, you can't actually get there. You're about a 1.5% short.
It'll be tough. That's why it's so important now. So we spend a lot of time with clients, counseling them through the PPP loan or the EIDL loan. And now I have the money. I want to make sure that I can get as much of it forgiven as possible. And so you really have to be careful. You have to understand what's on the back end of this in order to make sure it is forgiven. And there's so many unanswered questions that you really have to work with your banker or your accountant or somebody to help you understand, what it is you can do as far as number of employees. Can you reduce salaries? Can you let people go? Do you need to hire them back? What does that mean? Do I have to restore salaries? I mean, there's so much to take into account that you really have to be looking at that right now, I think.
So Nick, you guys kind of had a trick that way to keep track of what you were spending out. What are you advising your clients to do?
Well, we've advised folks. I mean, it depends on the sophistication of the client, but we've said an easy way for folks to have a paper trail that's very specific to these funds is we've been opening hundreds and hundreds of just PPP specific funding accounts for clients and placing loan proceeds just directly into that account. So from a documentation perspective, it should be easier for those folks to say, yep, this check or this payment on this date went to this expense, which was rent. This payment went to this expense, which was payroll. And here's my payroll documentation backing up that this, $5,000 went to payroll on this date and it was pulled from this account. So just from a documentation perspective, it should allow for an easier paper trail. I think what a lot of this sums up to is that unfortunately, we don't have clear direction yet from the SBA as to what the forgiveness process will entirely entail. And until we do, we're advising clients to keep, as detailed records as they can. We have some basic ideas on or understanding on what funds can be spent on, and just to keep good records on it. I think the thing I keep coming back to is that this wasn't meant to be a government sort of gotcha plan, right? I mean, this was meant to be a stimulus plan. I would suspect that, as the stimulus plan is, details of the forgiveness are rolled out, that they will make it, relatively easy for people to qualify. But we don't know that yet. And until then, I think people need to be mindful about, how they're spending their money and keeping track of it, because, we as bankers are going to have to work with our clients similar to how we did in the front end, where we collected an application, collected supporting documentation from the client regarding how they're calculating these payroll numbers. I'm assuming that we're going to get a separate certification from the borrower and then supporting documentation to show how you spent the money. So if you're expecting to get the funds forgiven or would like to get them forgiven, you should keep good records of how you spent that money.
Yeah, I recall our Bridgewater rep called and said, "You want to open a new account?" I said, "That's okay. I know how to do math, but I'm a nerd and I love spreadsheets, so I got no problem mixing all the money in together. I'm good." But I think that's a great tip. Like, if you're at all nervous about this, and I think Ryan, from an attorney perspective, can have too. If you've got really good records and it's in a separate account, you've probably got a better case, wouldn't you say?
Yeah, I mean, I think the record keeping piece is the easy piece. That's just an administrative task. The harder piece is when you're trying to make actual decisions that affect real people's lives. Of can you let people go? Do you have to bring them back? Can you pay bonuses? When they say you can use it on rent, what exactly does that mean? Until they provide guidance, it's really hard for people to make decisions about how to use the money. So, I mean, to me, the record keeping is kind of the simplest of all.
Well,
Sure.
and what I'd add on to that is they force a clock upon everybody too. So, I mean, for us as a lender, if we get you approved through the SBA, on April 16th, well, I only have until the 26th. I have 10 days to get that loan closed. So they're forcing that clock to start ticking on the client. And then it's 8 weeks from the date that the loan is closed or the first funding on the loan is made. So it's not like we can all, race to get the SBA approval and then, just wait to close these till May 15th, or let's just say May 4th. If you're a restaurant owner, and, we've had restaurant tenants and salon clients that have said, God, I mean, I can't even open right now. Like, if I hire people back, I'm going to be paying them just to sit at home. So, they're trying to sort out how they can even spend that much money on payroll over that period of time. And again, we're advising those clients to say, well, if you can't spend that money, and Ryan had alluded to this earlier, don't go out spending it on something else. I mean, if you leave the funds in your account and, 50% of your $50,000 loan doesn't get forgiven, but you still have 25 grand sitting there, well, at least you can just use the 25 grand to just pay back the loan. I mean, the interest rate's only 1% over the course of 8 weeks. It's a pretty nominal amount to have some, rainy day funds that were set aside for a period of time.
Sure.
And I've seen quite a few people who get in kind of a strange predicament where they don't have enough work or enough stuff to do to justify, keeping some of their employees on at a full-time basis. So, they maybe have them working part-time, or they cut their hours down to 20, 25 hours a week. Well, depending on the state, those people might now qualify for underemployment benefits. And with the extra $600 a week they're getting from the government, they're making more than they would be making if they were fully employed at the company working 30 to 40 hours a week. But now under the PPP program, the company took the money, the company wants to have it forgiven. They don't want to have it be their own debt that they have to repay back. So they're now bringing these people back and saying, we're going to put you back to 40 hours a week and pay you full time, but we don't really want you to do anything. And now these people are pissed because they were getting more money when they were collecting underemployment. So it creates like a really kind of perverse situation.
Interesting. We have a lot of questions in the chat room. I'm going to get to a couple of them quick, and then I want to get to the forgiveness amount more on that, and that piece of it I think is important for people. Let me just grab a couple here. W-2 in 2019, but now self-employed. Is there a way to qualify? Anyone want to take that?
Sorry, the question was someone who's been self-employed.
Recently self-employed. Doesn't have records for 2019. Would you be able to use that January, February payroll for new businesses? Would that qualify?
I would think so. I mean, if they were W-2 and now they're self-employed, that means they started their own business. So without knowing more, assuming it qualifies as a new business, I'd do yeah.
So there was a carve out for January, February payroll of the current year for new businesses. But if you started in March, I think you're out of luck. Would you guys agree with that?
Yes, the key is you do have to have been in business on February 15th, 2020.
Okay.
Exact answer to that question, I don't want to just sit here and flip through all my regulations, but they did issue an interim final rule that I believe contemplates this exact scenario. So whoever asks can look there. Otherwise, feel free to reach out to me and I can point you in the right direction.
And then before we move on to the forgiveness part of this program, this one's a good one from Rick Albers. I was told that the applications for the second batch, funding can be batch submitted, Where are we at on this second round? Is it full? Are the bank applications getting through? And maybe just walk us through the nightmare that was on Monday. Maybe we'll go to Nick for that.
Yeah, so the last the round one funds ran out on, I believe it was Thursday morning, the 16th. So the program opened on Friday the 3rd at 6 a.m. Funds were gone by Thursday the 13th at 9 a.m. They didn't get the second round approved through Congress and signed. I believe the president signed it Friday the 24th. So there was this window of time, the 16th through the 24th of April, where it was pretty certain that they would approve additional funds, and banks already had sort of a stockpile of inquiries where they were working with clients. So us, like a lot of banks, we continued to work through those applications, and with the hope that additional funds would be made available. Then they were made available. So we were just sort of stacking them all up through our internal approval process and just waiting to be submitted to the SBA. And just to take a step back, I think someone asked another question around approval versus SBA approval. So I think early on, folks thought that they had their loan approved because their bank might have said, yes, we have your internal approval. Well, the way in which the SBA will sort of allocate funds to an individual borrower in the program is that the bank has to fill out a form through the SBA has a website. The website's called eTran. We go into that website, we submit application from submit information from your application, some other areas. And once we submit that, the SBA then provides us back with an SBA number from them that says you've been approved, here's your SBA number. So once that number is provided to that borrower, the funds have been allocated for that loan to that borrower. So until you have your SBA number from eTran, from your bank, you have not been approved through the SBA, even if your bank has said we've approved it internally. So regarding the amount of funds, the next round the second round opened up Monday morning at 9:30. So we had hundreds of applications that we were just waiting to start inputting into the system. It's literally been an all hands on deck approach at our company and a lot of banks. I mean, we've repurposed our events person, because we're not doing events, to enter things into eTran. I mean, we've got marketing or HR people. We're not onboarding new employees right now who are entering into eTran. So we had a whole stack of people ready to enter in, and then the SBA's website was, completely inoperable all day on Monday. We didn't get a single application entered until 6:30. We've had people entering in applications, all evening. I mean, till 2-3 o'clock in the morning, because in the evening the program opens back up because there's less people in there. So regarding the total dollar amount of funding, there isn't a great way to keep track of it that I've found. Honestly, I mean, I've got probably the most banker Twitter feed ever. It's I follow Minution and search hashtag Paycheck Protection Program. But I've seen best information, honestly, just trying to follow some of the Congress people and some of the folks around the SBA program. But from what I've heard, there's been roughly, I think, 60 or 70 billion as of yesterday afternoon that had been approved. The larger financial institutions were using some automated software to enter in, which was allowing them to get through ahead of others. But the SBA has said that they are governing any institution, regardless of size, to entering no more than 350 applications per hour. So,
Wow.
And this is interesting. I mean, while I was on this call, our vice president of loan administration, who's doing a lot of this work for us, said that she heard this afternoon that from 3 o'clock this afternoon until 11 o'clock tonight, they're closing the program to any institution over $1 billion in assets. So I think they're trying to give a lot of the small banks an opportunity. They're closing it for that window of time, the E-Tran program. So this is all like it. I know folks have been frustrated. I can tell you that, we are just as frustrated because, whether it's me or Jim or Ryan, I mean, we don't get clear direction, and then the rules and the guidance changes, seemingly on a daily or hourly basis as to what we're supposed to be doing or how we're supposed to be doing it.
Okay, I got to pause for a second and ask a CE question. Hold that thought, Ryan. I'll get back to you, and I want to get to Jim too. The question is, if you're getting continuing ed credit and you're in Minnesota, hello, pay attention, and go into the chat room and answer this question. Another program, the Emergency Disaster Loan, EIDL. What does the I stand for?
Injury.
There you go. Injury Disaster Loan. Has anybody online watching this right now made an application for that? And especially comment if you've received there's supposed to be a $10,000 grant that came out right away with it. Let us know on what your experience has been. If you haven't had any experience with it, then just make sure you use your name and say no. And if you have, then please expand in the chat room, and that'll be meet your qualifications for CE, except for at the end of the program. Okay, Ryan, back to you. You finish your thought.
Yeah, just two really important things I want to note on kind of the whole eligibility question before we turn to forgiveness. There's really two key components of whether people are eligible for the loan. Is one, are you an eligible type of business? And two, was the loan necessary? On the first one, if you were to actually read the CARES Act, it looks like it applies to any business who has 500 or less employees or who otherwise complies with the SBA size standards. However, when the SBA came out with their first set of rules on this topic, they said that existing regulations about who is ineligible continue to apply, as described in what's called the SBA Standard Operating Procedure Document. And I want to point this out because this is really important for real estate owners who may be on this webinar. If you look at that document, it very clearly states that businesses who are primarily engaged in owning or purchasing real estate and leasing it for any purpose are not eligible for SBA loans. So to me, if you're a real estate management company, you're probably eligible. If you're a construction company, you're eligible. But if you are just a real estate owner, even if you have employees, you arguably are not eligible for the program. So for anyone who is considering applying and falls into that kind of subset, I think it's really important to talk to your lawyer, your accountant, your banker to make sure you're not kicked out. And then second, the certification that the loan was necessary. This was something that, at least in the first round, not a lot of people paid much attention to. I think myself, other people at our firm, other advisors I talked to at other CPA firms and other law firms, the conventional wisdom had been, because the SBA hadn't provided any guidance on what was meant by necessary, we kind of thought, well, as long as you could say in good faith that but for this loan, I'd have to lay off employees, it's probably necessary for your business. Well, after the first 350 million went out and they started getting some public pushback and about bigger companies who got the loans, they came out with a new standard in the last few days that now says in determining whether a loan was truly necessary, a company is supposed to evaluate kind of its access to capital from other sources and whether obtaining that other capital would have a significantly detrimental effect on the business. So, of course, they answer a vague standard with another standard that's even more vague and ambiguous. So a lot of people I've talked to, who maybe have a pretty healthy balance sheet. Maybe they had some other line of credit they could have drawn on, or maybe their business hasn't really been that affected by the crisis to date. They're really questioning whether it was appropriate for them to have made the certification that it was necessary. So SBA has created this kind of safe harbor where if you now have second thoughts about whether you really should have said the money was necessary, if you pay it back by May 7th, they won't, they'll kind of hold you immune from prosecution. But for everyone else, especially people who borrowed more than $2 million, as of yesterday, they say they're going to now do a full audit on it. So again, I'm not saying that to spook people. I'm not sure how much of it is real, how much of it is just kind of a political talking point. But it's something that everyone really who got the money should take back and really think through whether they're comfortable having made that statement in light of the new guidance, especially considering that the individual who signed the application could have some criminal liability for it.
When I read that paragraph on not able to get funds elsewhere, to me, what that said is I'm not able to find a forgivable loan elsewhere. Yes, correct. I don't know anyone that's willing to give me money and not have me pay it back. We met the standard.
Yeah, it's very challenging because it's obviously a subjective standard, but it's everyone's got a different risk tolerance, and I think most borrowers have decided we can comfortably make that statement. One thing we've been advising people is maybe put together like a position paper, a white paper, and just have it in your own kind of documents and files, kind of demonstrating what was your thought process on the date you applied for the loan, and what was the outlook for your business, and why did you think it was necessary? Because in the very unlikely event they come back and they do some kind of audit or there's some kind of prosecution or enforcement, it would be easy to have that document to pull out and say this is what we truly were thinking at the time, as opposed to someone saying, well, you're saying that now, but that's 2020 hindsight, and there's no way of knowing were you really acting in good faith at the time you took the loan.
So we're at 1:52. This ends at 2:00. We've had a couple webinars go over. If you're one of the almost 400 people online right now, you have to leave at 2. We'll record this. This is being recorded. We'll put it on our YouTube channel. So if these guys do agree to go a little bit over, I'll put that YouTube channel up before you end here at 2:00. But we'll also email it out to you, and we'll probably keep going. Jim, I want to give you a little bit of airtime here. Do we want to talk about rehire or loan forgiveness? Should we go with the loan forgiveness piece?
Sure. I mean, yeah, whatever slides you want to, and maybe, this is also for Nick as well. We recommend that you go in for, go into the bank. You have to start with your bank and go in soon as the, 8 weeks are over. Hopefully you've kept detailed documentation, where the funds were kept, how they were spent. And then after that, a bank has 60 days in which to either grant loan forgiveness or not. So, you're going to have to provide documents that verify your number of full-time equivalent employees. We don't know what that term means yet. We're hoping to get guidance. Any payroll tax filings that were reported to the IRS or the state tax authorities, and any documentation of payments on eligible debt that you could pay interest on, any leases or utility obligations, you're going to have to provide documentation to your bank on.
So let's use a real life fact scenario. We can just use me, since when I'm not pretending to be a webinar host, I'm pretending to be a CFO. We have payroll and we use ADP. So first of all, Jim, would you just calculate this for me? If I said, can you advise us? Can you just help me make this calculation?
Yep. Yeah. No, we certainly can't. I mean, at our firm, we've already put together this Excel spreadsheet that goes through all the different costs that, we think, qualify, what a full-time equivalent, looks like. So yes, we've already done that, but we're going to ask you for the documentation behind that So any 940s, 941s, anything like that. We'll ask for your bank accounts, your bank statements. Hopefully you've put this money into a separate bank account. Todd, you may not because you like spreadsheets. We'll ask you, for your spreadsheet.
Mhm.
But yes, we can help walk you through.
Well, and I don't want to get too deep in the weeds, but my 940s and 941s are not going to tie out to the forgiveness amount, right? So I don't know, right? It's on a certain date in the middle of the month. Nick, am I right? That this period?
Yeah. Well, and I think, and somebody had asked a question earlier regarding sort of like my bank asked for, support for how they were, for what their payroll was, what do I need to provide? I mean, they haven't said, you need to provide this form. This is the one thing that you need to show that shows us that you paid this payroll for sizing the loan. I assume the same on the other side. They're not going to say, give me your 940 or 941 because that's the only document that will qualify for showing that you paid your payroll. I mean, maybe ADP will. I mean, as they did on the front end, they had a whole interface that allowed for just spitting out all the things, excluding the things that weren't eligible for the program, and just giving businesses that use that firm a report. So I would suspect that they would again allow that as long as there's some backup showing this is what I spent the money on. And for us, I mean, similar to the front end, we're going to gather that information. I assume that there's going to be some document that the borrower, the company is attesting that it is accurate. And we're just going to save it and submit to the SBA. Now, on the front end, we didn't even have to submit any of that information that you provided to us.
Oh.
I mean, we didn't, like all those supporting documents, the 50 emails, or PDFs, we're holding on to it, but we've just entered the information through the application on the front end. I don't know if the back end is going to be the same, where we're just saying we collected the information that appeared to be correct. They attested that it was correct. Please forgive the loan. Or if they're going to require us to submit all of the supporting documentation along with it. I think they're still sorting through all that, and that's why we haven't determined, or we haven't received guidance yet on what the forgiveness process is, because they don't, I don't know that they fully know. And frankly, I mean, I think they're waiting. I think they're waiting until the funds are all gone in round two, because once the funds are gone and they've disincentivized some companies that could potentially get the money elsewhere by saying they're going to do these audits and other things. Once the money's gone and they release the forgiveness structure, if the forgiveness structure is super simple and you didn't have to do a whole lot, if they do that before the money's gone, there's going to be a lot more people that maybe don't need the money that are coming in and asking for it. That's my 2 cents as to why they're sitting on hands.
That could lead to a lot of fraud. If I worked for the Strib right now, I'd be like, hey, I got about 10 front page articles coming about people that took advantage of the PPP program.
Yeah.
And by the way, you guys correct me if I'm wrong, but all SBA loans are eventually become public in terms of the name of the borrower, the loan amount, the loan term. So we expect that, they've publicly said they're going to do this. They will be releasing, lists of everyone who took money under this program and how much they got. And you can rest assured that the Star Tribune and all these other publications will be chomping at the bit for that.
Right. So even if you don't, like, if you feel comfortable that you can just hold on to the money, or you have the ability to repay it back, so you're not worried about repaying it, I mean, there's certainly reputation risk along with that. Yep. So I'd agree with Ryan.
We at the Minnesota Real Estate Journal, Illinois Real Estate Journal are not going to print articles like that. Not interested in sensationalizing. I have a question for Ryan, and this is again back to our fact scenario. I actually have more people on my payroll now than I had when I calculated the amount of the loan. Will that help me get to a higher forgiveness amount?
Yeah, in theory, right? So, your payroll costs are forgivable, right? So, as long as there's no prohibition on hiring people, you think that that's what they want you to do. So if you hire more people, in theory, your payroll costs have gone up, and that should, increase kind of your base amount of forgiveness.
I think for us, cross your fingers if I can do that on the webinar. We were able to pick up a couple of really talented people that we've been trying to hire for a long time because of the disruption. So hopefully that pays off for us.
Yep.
Nick and Ryan and Jim, take a peek at the chat room and see if there's any questions in there you want to hit, because there's a lot of them. We're at 2:00. I put up the YouTube channel, so if you have an appointment at 2:00 Central and you need to leave, that's the address. We'll also email it to you. So the next, are you guys going 10 minutes over?
Sure.
I'm fine.
10 minutes, we will add onto this video, and it'll be there on YouTube for you to watch if you can't stick around. I'll give you a minute to kind of look for questions, and I'll look too. But grab the ones that... Oh, you're Jessica Porras. I like this one. I received the loan after the 15th of the month, which means that only 3 periods will be covered in the 8 weeks. It means I won't be able to cover 75%. What happens in that case?
Sorry, can you read one more time?
Yeah, so the fact scenario is the borrower received the loan after the 15th of the month, and they must pay payroll on the 1st and the 15th. So they're worried about this time frame issue. Am I going to get fewer pay periods in, or does the extend out?
Right. So what that's getting to is for all the forgivable expenses, they have to be incurred and paid during the 8 weeks. So what she's asking is, what happens if you incur the payroll during the 8 weeks, but you haven't yet paid it? Do you need to accelerate the payroll? There is no clear answer to that. I think the conservative answer is, if it's feasible operationally, I would just, accelerate your payroll, do some kind of stub period so you have clear records of it both being incurred and paid during the 8 weeks.
I hadn't thought of that. That's really good advice, because pay periods are all over the place, right?
Yep.
And we're talking about the date you got your loan. So Nick, are you going to send me a reminder when we get towards payment? Hey, don't forget to pay your people early. That's going to be a little bit of a disruption that I think we can handle, but boy, don't miss it, right? We don't want to screw this up.
Well, and we don't
amount
want
would be
people
big.
to screw it up either. And that's where, we've got hundreds and hundreds of these that, we can't keep track of 100 different companies and independent, we can't keep track of everybody's payroll for them. So ultimately the onus will be on everyone else to try to follow the instructions. And again, I know you joined on this conference, this webinar, to try to gain additional insight into that. And on the forgiveness side of it, at least, we're all still waiting for specifics from the Treasury and the SBA as to how that's supposed to operate. We've been telling our clients we will make that information available as we know more. But it's as of right now, there's more questions than answers.
And not only have they not provided the guidance, but they haven't told us when they're going to provide more guidance. So
Yeah,
could come at the time. It actually was required. The CARES Act said they were supposed to provide all the guidance within 30 days, which would have made this stuff due, on last Saturday, but they just blew by that deadline, obviously. I think if I'm being cynical, I think they're purposely trying to sow confusion to kind of, kind of dissuade bigger companies or people who took, significant loans from either participating in the program or pay it back, so that, kind of the true mom and pops, can take advantage of the program.
Yeah, they're the ones who are going to be easily the most confused, because they're just used to running a business. They're not used to reading legal documents.
No.
They don't have a legal staff. There's a good question here from Christopher Hamilton for you, Ryan. It was mentioned earlier, real estate companies were eligible, and another comment about fraudulent applications. He says, I'm a real estate company, applied and received, I'm assuming PPP, but maybe kind of mentions the IDL. How nervous do I need to be? I think it depends on what kind of real estate company.
Yeah, I think it depends on what kind of real estate company. I mean, if it's I'm going to flip back here to the exact language they use in their standards. It's, if you're a business that's primarily engaged in owning or purchasing real estate and leasing it for any purpose, then to me, it's pretty clear that you're not eligible for the loan. Now, I'm sure there's always different fact patterns and different arguments about how maybe, you do own and lease real estate, but it's not your primary purpose. So everyone's situation is different. All I can say is, it's all a balance, right? So if you think about it practically, are they going to be able to come audit, 4 million business owners who got these loans? Probably not. It's probably like when you take a more aggressive position on your tax return. Like you have an increased risk of audit, but the actual odds of getting audited might still be low. So I think the exact answer to how nervous someone should be is probably a function of, what kind of other pressure points are they up against? Is it otherwise absent this issue? Are they otherwise clear for the program, or is there any issues with affiliations or number of employees? How much money are they taking? Obviously, we know that anyone who's now taking north of 2 million is almost guaranteed to have some sort of audit. And, what are the payroll costs? That's the kind of stuff I would think about, and then kind of play devil's advocate to those points. At the end of the day, if he's using the money to keep people on payroll and not cut their comp, it seems to be that he's doing what Congress wants him to do. So it's hard to reconcile the point of the law and the overarching purpose of the law with these pre-existing regulations that are kind of hard on real estate companies, which have nothing to do with PPP loans. They're just regulations that apply to SBA loans in general.
Well, if I may add, right. If all you're doing is right, it just depends how you read it, and it just depends upon any other activities they may have going on. If they have a management company, do they have a brokerage company, right?
Yep.
If they have other competing companies that are in addition just to being a real estate owner, then right, you really kind of have to balance it. And I agree with Ryan. If you have employees that you're trying to keep employed and so forth, I think there's some competing facts and circumstances, and also they should be taking advantage of any tax law changes too. So.
Mm-hmm.
All right, since we're over time, what I just want to do is go around and get final thoughts from all of you. Did we miss anything that you wanted to make sure you touched on? So grab that, and then any final thoughts you want to share with the audience, we'll go on my screen. We'll go clockwise to start with Nick.
Yeah, I think we've reiterated this a few times in other publications and such. I think we just encourage people to be patient. We're working as quickly as we can. We do have a lot that we've pushed through. We have a lot that we are continuing to work on, and to the extent that people can be organized, that will speed things up for everyone. I think. I only have a finite amount of staff, and if we have, hundreds and hundreds of inquiries that we're still working through, I've told my staff, like, get on the phone with someone. You can tell them you've got 5 minutes, because you can't spin your wheels with one person for 3 hours and then not help the 50 other people that are in your queue. So, try to research, understand the program. We're available to help. We give very clear instructions on what folks need to do. But, we have run the gamut of somebody who, operates a company with 480 employees. They're just under the limit, to a sole proprietor. And, the guy's never opened Excel before. So we're trying to help everyone, and we're trying to allocate resources accordingly so that we can help as many people as possible. So be organized and be patient. We're working as quickly as we can, and we'll continue to work as hard as we can until these funds are gone.
Okay, Ryan, over to you. Final thoughts. Anything we missed?
No, I think we covered on a lot of topics. If anyone has more specific or nuanced questions, feel free to reach out. Like I said at the beginning, I've been spending a lot of time about this, and I think I probably know it about as anyone. It's a new program, it's new laws, new regulations. There's no one who can really claim to have the answers because they don't exist. And I think, as a bunch of us have reiterated, we're just as frustrated as the business owners. We're used to being able to provide clear direction and clear recommendations and strategy. And it's hard to do it here when, the laws are unclear, confusing, poorly drafted. And then on top of that, you've got public officials making statements that seem to be kind of changing the goalposts in the middle of the game.
And back over to Mr. Lockhart.
No, I would agree with both comments. Being organized, keeping good records, making sure you can track to where the dollars were spent, and stay in touch with your banker, work with your banker and your lawyer and your accountant to make sure that you're spending the money the way you should, so you can optimize the amount that can be forgiven. Answers. I'm sure Winthrop's website. They're posting a guidance as it comes out. Wipfli's posting guidance as it comes out on our website, and I'm sure Bridgewater is too. So it's going to be real important to stay abreast of what's coming out as far as guidance and staying in contact with your advisors.
Well, gentlemen, that's it for today. But so if you're watching online, I'm going to take the chat room, copy it, and send it to these participants. Katie, if you're listening and you can help me do that. To the speakers. Then the speakers might have a chance, if they see something in there they didn't get to, they can email you privately if they have time and desire to do that. If you want the slides that Wipfli prepared, we only showed it briefly on the screen, but I think there's a lot of good information in there. Email Jim Lockhart. I'll put his email up one more time. Or in the chat room, give us your email address, and I'll make sure that gets to Jim. And he'll have those emailed out to you.
Yeah, Todd. Yeah, just give us the email addresses, and then we can send them out like we have with the other webinars. And to the extent that we didn't answer any questions, we can prepare a frequently asked question. And to the extent that we can try to answer everyone's question.
Great. And if you're on here for CE, just quickly jot your name in and say goodbye, and that'll help us make sure we have the timestamp. I don't trust the software 100% yet, but it does timestamp you in and out, so I think we're good. But thank you for doing that extra belt and suspenders approach. Gentlemen, this was fantastic. We could probably be on here for 4 hours just trying to figure this out, and it may not be the last time we talk about it. So thank you guys for your preparation, your time, great information. I'm going to put on our quick commercial. I'm going to leave the chat room open for a while, but your speakers can feel free to log off, and thank you again.
Thank you.
Thanks, guys.
Thanks.